In the Global Financial Stability Report, the last mile, financial vulnerabilities, banks continue to face challenges in higher for longer interest rate environment. Why? Aren't they making all this interest rate income? Yes, they are. But again, in this higher interest rate environment, their foundation has been cracking, or should I say sinking. So if there's a run on the bank, they have to sell these assets out. They're not, right now, they're just stating them at, saying like they're going to hold them to maturity at par, but in reality, the market value is way down here. And what we keep hearing from the Fed is higher for longer. Now, there has been, as I've discussed before, and I'm sure we're going to talk about it again, what they want is they want the Fed to lower rates. But what does that mean when they lower rates? What they're going to do is they're going to print more money. What does that do to all the money that's out there? Means that it loses more, more and more of its value. This is what you and I work for. And some people attempt to save it. I don't attempt to save it in that form. I save it in this form because I know that that's undervalued. I know that this is overvalued, right? Inflation shows you the true value of this is zero. This time is not different. It's happened so much. But let's take a look at this because this is stock performance continue to rebound. Central bankers and governments use the stock market because they know that's what most people look at. So you open up your 401k statement, and as long as it hasn't dropped a lot, you go, oh, everything must be okay. Well, again, I'm going to tell you, in some cases, you cannot take a distribution from your retirement plan, but you better be diversified because what are you going to do? You know, I always like to ask myself, what if I'm right and what if I'm wrong? And if there is an option where it does not matter whether I'm right or I'm wrong, that's the option that I'm going to take 100% of the time. That's what gold does for you. It gives you that option. And, you know, there are some things, because of course there is gold and there's gold, and we can save that for another day. I'll be talking about that pretty soon. But regional distribution highlights structural weakness and profitability challenges ahead. So what do we have? We have stock markets making all-time highs, but their incomes aren't keeping pace with that. Their debt levels, well, sure, if there's a lot more money for free, if the Fed lowers those interest rates and prints a whole bunch more money, enables a whole bunch more debt, that can paper over it for a minute, as we've seen. But quite frankly, they're having a harder and harder time papering over this thing. It worked the best in the beginning, but every time they print more money, they have to print even more, and they're still not even getting the impact that they want. It's like pushing on a string. It's not going to work. And that means that all of us are vulnerable.
In today's higher interest rate environment, banks face unprecedented challenges. While they may appear to be benefiting from increased interest rate income, the reality is that their foundations are weakening. Lynette Zang highlights the importance of recognizing these vulnerabilities and protecting oneself by investing in physical gold and silver. When banks experience a run, they are forced to sell assets at market value, which is significantly lower than their stated value. This discrepancy is a ticking time bomb. Despite holding these assets to maturity at par value, the real market value is much lower. This means that in times of financial distress, banks could find themselves in serious trouble, exacerbating the economic crisis. The Federal Reserve's persistent message of higher for longer interest rates further complicates the situation. While some hope for a rate reduction, this would entail printing more money, devaluing the existing money supply. This devaluation erodes the purchasing power of savings, making it imperative to find alternatives like gold and silver that retain value. Zang emphasizes that stock market performance is often used as a gauge of economic health. Central bankers and governments rely on this perception to maintain public confidence. As long as the stock market appears robust, people believe the economy is stable. However, this is a dangerous illusion. Many people see their 401k statements and feel reassured when they haven't dropped significantly. However, relying solely on these investments is risky. Diversification is essential. Gold provides an option that protects against both inflation and economic downturns. It's a safety net that doesn't depend on the performance of traditional financial markets. Inflation is a clear indicator of the devaluation of fiat currencies. Despite the appearance of stability in stock markets, the true value of money is eroding. Zang points out that the purchasing power of fiat money is continually diminishing. By contrast, gold retains its value, making it a reliable store of wealth. Historical examples abound. During the Weimar Republic's hyperinflation, gold preserved wealth while fiat currency became worthless. Today, we see similar trends in countries like Venezuela and Zimbabwe. In these cases, those who held gold were able to maintain their purchasing power and navigate through economic turmoil. Banks face structural weaknesses and profitability challenges. Their incomes are not keeping pace with stock market highs, and their debt levels are unsustainable. The Federal Reserve's actions of lowering interest rates and printing more money may provide temporary relief, but create long-term instability. The problem with these strategies is that each round of money printing becomes less effective. The impact diminishes over time, leading to a situation where the economy is continually propped up by unsustainable debt. This cycle cannot continue indefinitely, and when it breaks, the consequences will be severe. The importance of physical gold and silver. Physical gold and silver provide a hedge against these economic uncertainties. Unlike fiat currencies, which can be devalued through inflation, gold and silver retain their value. They offer a tangible asset that can be held and used as a store of wealth. Gold, in particular, has historically been a reliable hedge against inflation and economic instability. Its value is recognized globally, making it a universally accepted form of wealth. Silver, while often overlooked, also provides significant value, particularly due to its industrial applications. Zang highlights the importance of consumer sentiment in shaping economic realities. As inflation expectations rise, consumer confidence falls. This creates a vicious cycle where reduced consumer spending further weakens the economy. For example, recent data shows that U.S. consumer sentiment has dropped to its lowest level since November. Inflation expectations for the year have risen to a 6-month high. This combination is troubling for central bankers who rely on consumer spending to drive economic growth. The economic instability also has social implications. Ray Dalio, a prominent investor, warns of the potential for civil unrest, estimating a 1 in 3 chance of civil war in the U.S. This highlights the importance of being prepared for various scenarios, including social and political upheaval. Preparing for such possibilities involves not only financial security, but also ensuring access to essential resources. Food, water, energy, security, and community are critical components of a comprehensive preparation strategy. Physical gold and silver play a crucial role in this plan by providing a stable store of value that can be used in times of crisis.
So make no mistake about it, this banking crisis is not over. And we are about to get a huge lesson in this as inflation expectations rise. Because whatever people think, so shall it be, at least according to the central bankers. U.S. consumer sentiment falls to the lowest since November. Inflation expectations for the year had rose to a 6-month high. So there's your consumer sentiment, there are your inflation expectations. That is a very bad combination for central bankers. Very bad indeed. Is the consumer faltering? Are they going to stop shopping? Because what we know is this: if indeed this is a bubble, and we know it is, And we know that it's already popped on so many levels. They want to pump it back up. That's the point of lowering interest rates, to pump that debt bubble up. But there's so many holes in it right now that it doesn't matter. It's just about buying time until this next crisis erupts. What we are really seeing is what we need is a very vocal core. And it looks like we're getting it. And there is no fever like gold fever. And we've spoken about this quite a bit as well. Ray Dalio warns the U.S. is on the brink. And what he's talking, and estimates a more than 1 in 3 chance of civil war. 1 in 3. Let's make this a peaceful movement by simply putting your fiat money into sound money, physical gold, physical silver in your possession. Because quite honestly, regardless of your perception, if you don't hold it, you don't own it. It does not matter what you think. Billionaire investor Ray Dalio is holding on to gold as a hedge against the potential risks of rising inflation and a looming debt crisis, and he's preparing for civil war. How do you prepare for civil war? Food, water, energy, security, barterability, wealth preservation, community, and shelter. Get it done. We need to be as independent and self-sufficient as possible. And the best way to do that is inside of community, because time is running out. A 1 in 3 chance, and I happen to agree with Ray. I just want to make sure, if I can, I want a peaceful revolution. I don't want a violent revolution. I want a revolution that we've got a chance to win. And if you move into sound money, and again, there are ways to do it in ways, they're hedged bets, let me just say that, then you have an opportunity to actually thrive through this crisis. Because wealth never disappears, it merely shifts location. Let's make sure it shifts your way. That's what he's doing. Because what we can see is the 1%ers own physical gold. We know that central banks have bought more gold in the last couple of years than ever in recorded history, going back to 1950, when we were still at least quasi-backed by gold. What do you think? They're ready. Are you? Have you done that?
Central banks worldwide are accumulating gold at unprecedented levels. This strategic move indicates a recognition of gold's enduring value and its role in ensuring economic stability. The actions of central banks should serve as a signal to individual investors about the importance of holding gold. For instance, the World Gold Council reports that global central banks have been net buyers of gold for over a decade. Countries like China and Russia are leading this trend, increasing their gold reserves to reduce reliance on the US dollar and protect against economic sanctions. In times of economic uncertainty, gold and silver act as safe havens. Their value is less volatile compared to other investments, providing stability and security. This is particularly important in a world where geopolitical tensions and economic policies can rapidly change. The recent rise in gold prices reflects this trend. Investors are seeking safe havens amidst global uncertainties, driving demand for gold. Silver, with its lower price point and industrial applications, also offers a valuable investment opportunity. Practical steps for investors. For individual investors, the first step is to diversify their portfolios. Holding a mix of assets, including physical gold and silver, reduces risk and provides stability. This involves purchasing gold and silver coins or bars and considering gold-backed investment vehicles. Investors should also stay informed about global economic trends and policy changes. Understanding these factors helps in making informed decisions and adapting investment strategies as needed. Regularly reviewing and adjusting portfolios ensures alignment with long-term financial goals. Digital gold-backed currencies represent a significant innovation in the financial world. These digital tokens, backed by physical gold, combine the stability of gold with the convenience of digital transactions. However, The key is ensuring these tokens can be converted into physical gold. Zimbabwe's introduction of gold-backed digital tokens is an example of this trend. While these tokens aim to stabilize the economy, their true value lies in their gold backing. This approach reflects a broader movement towards integrating gold into modern financial systems. Investing in gold and silver is not just about short-term gains, but long-term security. These metals have a history of preserving wealth over centuries. Their value is recognized globally, making them a reliable investment for future generations. For example, during the 2008 financial crisis, gold prices surged as investors sought stability. The same trend is observable today, with increasing geopolitical tensions and economic uncertainties driving demand for gold. This historical perspective underscores the importance of holding gold and silver. It's important to address common concerns and misconceptions about investing in gold and silver. One question often asked is how to store these physical assets securely. There are various options, including home safes and secure storage facilities. Ensuring the safety of these investments is crucial. Another concern is the liquidity of gold and silver. While these metals are not as liquid as fiat currencies, they can be easily converted into cash when needed. Selling gold and silver is straightforward, with numerous dealers and platforms available for transactions. Economic shifts are inevitable, and being prepared is essential. Holding physical gold and silver provides a hedge against economic downturns and inflation. These metals offer stability and security, ensuring that wealth is preserved regardless of economic conditions. Zang emphasizes the importance of having a comprehensive plan. This involves not only financial preparation, but also ensuring access to essential resources like food, water, and energy. Building a community and fostering self-sufficiency are critical components of this strategy. The broader implications of these trends are profound. As more countries and institutions adopt gold-backed monetary policies, the role of gold in the global financial system will continue to grow. This shift could lead to a more stable and secure global economy, with gold serving as a foundation for trust and value. However, this transition also poses challenges. The existing financial system, heavily reliant on fiat currencies, will face significant disruptions. Investors and policymakers must navigate these changes carefully to ensure a smooth transition to a more gold-centric financial system. In conclusion, the strategic accumulation of physical gold and silver is essential for protecting wealth in today's volatile economic landscape. These metals provide stability and security, ensuring that wealth is preserved regardless of economic conditions. By understanding the broader economic context and taking proactive steps, individuals can safeguard their financial futures.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today. Link in the description.